You're listening to That Home Loan Hub. I'm Zibuni Salimova, here to make home loans and property investing simple, smart and stress-free. Let's get you closer to your property dreams. Hello and welcome back to That Home Loan Hub. Kunch has joined me today.
Yeah, it's been a little wee while, hasn't it? Someone's been on holiday.
No, it was the wild weather. The planes were cancelled. I couldn't get anywhere. It was a fantastic holiday, Kunch. You should come with me next time. Lots of cocktails by the pool.
Yeah, maybe we'll make that happen, eh? Cocktail and work overseas. Sounds good.
I've been told to take my podcast with me overseas and interview people by the pool. You'll get the best stories.
Yeah. That'd be cool, actually.
Next time. Kunch, what have you been up to? What's happening in New Zealand?
Well, while you were away, there's some talks about capital gains tax on property.
Capital gains tax.
Yeah.
I'm sure they talked about it for ages before.
Yeah, it has been, in the media or spoken about, but one of our, what's it called, political parties has said that they will introduce capital gains if they get voted in.
Wow.
So we're not going to talk about any political stuff. So I just thought we'll cover the capital gains side of things and what that would look like for first home buyers and all property market sort of thing.
Yeah, and how's that going to affect them?
Yeah, so they're wanting to chuck in capital gains tax for investment property is from what I believe. So if you are looking at selling investment property as of or after 1st of July 2027, so it's not going to kick in for a wee while, should they come into government. So from the 1st of July 2027, if you sell an investment property and you make some gains out of it, that amount is taxed.
Oh, I thought we already taxed anyway. You taxed on profit.
You tax on the profit, yeah, from the sale. But the other one is bright line.
So how is that different to the bright line tax?
So the bright line tax is if you're selling an investment property within 2 years of you owning it, you're getting tax in terms of bright line now sort of thing.
Yeah.
So it's kind of the same, isn't it, if you think about that?
Well, that's where
because you're getting taxed anyway.
Yeah, so that's where I'm questioning. Or is it a tax if every year your property goes up in value, even if you don't sell it? Or I think you have to sell it by 1st of July to get rid of it.
By 1st of July and get rid of it, because after 1st of July you sell it's for capital gains.
Do you think it's for sale or do you think it's for the actual value? For instance, this year your house is valued 500 and the next year it's 600.
I think it's the profit difference from when you bought the house to when you sell. And if you made any gains, but then there's also deductibles that go with that.
Yeah.
Yeah. So you can deduct your interest, maintenance and things.
Yeah.
Which then might not be any gains as well. But I'm not a tax expert, so we're not going to deep dive into that side as well. I just wanted to chat about it affecting what the market would look like and also for our first home buyers. So my theory is that the investors may start selling now before 2027. So then there may be an oversupply in the market with those properties,
which is
meaning good for our first home buyers. Yeah. So that's the track I'm trying to go. Yeah, meaning good for our first home buyers because there's more stock, more supply, which then may bring house prices down. After 2027, our investors may not sell and hold on to it, which then means less stock, means house prices go up. Yeah.
Okay, interesting. I wonder what it will do to rent as well.
I think rent would, right now, if investors are trying to flick off, then rent would still probably stay the same. However, if investors are keeping more, rent's going to go up.
Because that's what I'm thinking. If that suddenly creates a shortage of rents, then the rent will go up.
Correct. If investors are flicking off right now, yeah.
Okay.
It's going to, less supply and rentals, more homeowners.
Interesting.
Yeah, it's an interesting
But
topic, isn't
But
it?
they've been talking about it for years.
Yes.
Like every time there is an election,
Yeah.
that topic comes up.
Yeah, but the only thing this time is that they're saying that they are going to do it. That it's like literally going to happen.
But then at the same time, I feel like I saw a post of one of the very famous investment advisors. He put a post saying, Labour says that they will implement, capital gains tax, and then they get into the government and they realize that 90% of politicians have properties. And they go, oh, hold on a second, we're not going to do that. 'Cause
Yeah.
that's not going to be a positive effect
Yeah.
on them. But I guess from the government point of view, what they're trying to do is they're trying to achieve an equilibrium where we live in a
correct.
equal world. And,
Yeah.
if you're running a business, if you're making profits, you should be paying
Yeah.
tax on it.
Yeah.
And again, funny enough, someone made this really interesting example, and I didn't agree with that example. But he was like, oh, well, if I've got a T-shirt business and I'm selling T-shirts and I made 500K profit, I pay tax on that 500K profit. So why is the property excluded? However, to me, it's a completely wrong example because we pay tax on the rent we receive. So him selling T-shirt is us receiving rent.
It's not the same comparison.
So I don't know. I just feel it's unfair if we have to pay tax on a property that continues to increase in price because of economical factors outside of our control.
Yeah.
But I wonder if they're trying to put a lid on the property prices increasing, because we have been experiencing some crazy property prices increase, right, in the last 10 years or so.
Yeah, I mean, like they're trying to fix something, and so they're trying to introduce, all this capital gains to try and fix it. But I don't know. I don't know, because it's only a handful of people who have so many properties, X amount of properties. Not everyone has that many. And you've got your mum and dad investors, they only have one extra.
Yeah.
And that is literally their retirement plan.
Yeah.
Yeah.
And that's where the unfortunate thing is, isn't it? Like the rich people that have multiple properties, it's going to be a drop in the ocean for them.
Yeah.
They'll be like, oh, well, cool, whatever, pay it off. But the ones that are mum and dad investors, they're going to get affected quite significantly.
Which I don't agree with that. They obviously worked hard all their life, and they're just trying to get one gains up, So I think maybe a cap on, like, if you've got 5 properties or if you've got 3 investment or something like that, then you got to pay capital gains. Not like when you've got only just that one extra.
Yes, it's going to be an interesting place to watch because a lot of investors are now asking, oh, should I be buying? Should I just hold off? What should I do?
Yep, lots of investors that's crossing their minds. So watch this space, especially our first home buyers. If investors want to get out, next year is the year of election. So October 2026, you may see more houses December 2026 on the market.
Yeah, time to buy. So that's why come and see us earlier so you can sort out your finances. Awesome, guys.
Cool.
Thank you so much for tuning in. I hope that this has been a good discussion for you to listen to. And if you've got your own thoughts on this subject, please let us know. We would love to hear from you and what you think is going to happen. This is quite a controversial topic. So
it is. That's why I didn't want to deep dive too much.
So we try to keep it very above
water.
above waters, above the surface, because we don't want to be shut down either.
No.
We love this podcast. So please feel free to reach out and let us know. Thank you.
Thank
See
you.
ya.
Bye.
And that's a wrap on That Home Loan Hub. Don't forget to hit subscribe and join me next time for more property tips and tricks. Your next smart move starts here.